All right, joining us now to discuss BTC price and more is Market Gauge Group Managing Director Michelle Schneider in New Mexico. Hi, Michelle. Always a pleasure.
Hi, Christine.
So we do see that there's a bit of a decoupling with the stock markets. They're rising, Bitcoin's going down. I wonder what your outlook in the short term for BTC is.
Well, I'd really like to see it hold 37,000. Otherwise, I think we probably could see a trip to 33,000. So watching very carefully here, it might be the first time, Christine, in a really long time that my own crypto wallet is relatively flat, having gotten out of things last week when it was clear that 40,000 was going to be a real barricade for Bitcoin, but always watching other stuff. And another interesting thing to say about Bitcoin is that if you look at it from the macro perspective, its ratio to Ethereum is outperforming, and considering both of them make up 70% of the whole crypto market, even with Bitcoin going down, we may see a relative outperformance of Ethereum. And if it can hold here, then Ethereum might actually turn out to be the better buy. So we really have close eyes on both.
So if you're seeing Bitcoin head a leg lower, are you shorting things? Are you on a shorting spree?
I would hesitate to short because, well, one interesting thing that could happen today, by the way, is MicroStrategy is reporting after the close, and it's sitting right in the middle of a range. So 300 would be about support, 400 resistance. It's trading at 348. And I think that kind of sums up like what would be my risk reward for going short. If I'm looking for a $4,000 move, but I would have to risk maybe, I don't know, 1,000 or 2,000, that's one thing. But I feel like that level of volatility, particularly after the Fed coming up, would be, for me, a little bit scary. I'd rather wait for the dip.
Speaking of the Fed, we're likely going to see a 50 basis point rate hike. Is that already baked in, or what are you watching for during the two-day meeting?
Well, definitely, I believe that it's baked in if it's 50 basis points. Could they surprise with 75 basis points? Yeah, sure, they can. Will they? Probably not. It would be smart of them to do that, but, they don't want to spook the markets too much, and we're still so vulnerable. But I think really what happens from here on in is more important. It's not so much about this meeting. It's going to be what they say about what they want to do going forward, what happens with inflation, what they feel about inflation. There are still a lot of people out there who think that it's transitory and it's peaking. I am not one of those people. So I would say that we're still going to see the actual equity markets relatively under pressure, except in a trading range, with commodities starting to actually outperform even more than they already have.
All right, Michelle, thank you so much for your analysis. Appreciate your insights. That was Market Gauge Group Managing Director Michelle Schneider.